investment portfolio update January 2023. It's going to be a wild year. Brandon Gentile here. We are back for a monthly portfolio allocation newsletter. We update this, and it's just strictly a portfolio allocation to show you where I have been investing our family office, our assets, and what I have been doing really over the last 12 years, but then to update it monthly to see where the allocation is. And we do the percents and things like that. We don't do the actual dollar amounts because I obviously don't want to divulge everything. But I also, at the end of the day, that doesn't matter. That's not going to help you any at all. But the percentages and where we are, I talk about being diversified, I talk about being prepared, I talk about diversifying all the time because true diversification is in different asset classes. And focusing is obviously very important. However, for the average person, again, dollar cost averaging is so incredibly important in something you believe in, but also diversification in different asset classes. And ultimately, I know this is not possible for everybody, but doing one investment and then just focusing on it all the time every day is not possible. Diversifying like I have probably isn't possible for the average person as well, because I've been doing it the last 10 or 12 years and building real estate businesses and acquiring properties, and that's not viable for the average person, honestly. I wish everyone could, and I hope that everyone does, but at the end of the day, it's not viable. It takes a certain amount of skill and time, and that's really, at the end of the day, why I went to Bitcoin, because I saw through the political process in 2000 to 2012, and then studying money the last 10 to 12 years and being in business and investing myself and building real estate businesses and acquiring real estate, that the average person wasn't going to do any of these things. And I've been educating on these things for years and years and years, and the average person just isn't going to do it. The 1% is going to do what they're going to do, and in the 10% of people, it's kind of the 80-20 rule, the 90-10 rule. The top really go-getter class of individual, I don't know how else to say it, they're going to go do what they're going to do. They're going to find out a way regardless. But the average person just wants to be left alone. They want to go do things with their family. Some of them might not have the intelligence to do it. Let's just be straight up honest. And some of them don't have the intelligence to do it. Some of them don't have the time to do it. Some of them have other things they want to work on. Some of them have other passions, other projects. So they just want to be left alone, quite honestly. They want their freedom, and they would like to have a little bit extra money at the end of the month instead of having too much month at the end of their money. This is ultimately why, after literally 20 plus years of being in politics and then having an investing business and real estate business, I realized, wow, you have to fix the money, because that's what does this wealth redistribution back to the people who are actually providing value, instead of arbitrarily just politicians redistributing the wealth through a collectivist communist approach. We actually have a capitalist free market approach, where it's the free market that's redistributing all the wealth around to the people who are actually getting off their behind and actually doing something in society and actually providing economic value. That is the aha moment over the last 2 or 3 years, and truly getting Bitcoin, because I started investing about 4 or 5 years ago, but I didn't really get Bitcoin until a few years later, and it's about 3 years ago now that I truly started to understand Bitcoin and see, oh my goodness, this is what helps bring the wealth gap. Because once you fix the money, everyone looks at Bitcoin as an asset still, which it is, but it's money. It's the hardest money we've ever had in our lives, and it's the separation of money and state. We had the separation of church and state, we've got the separation of media and state, but now we have the separation of money and state. And this is why this is so important, because again, the bottom 90%, that the wealth just keeps running away from them. The top 10% just keep running away with everything. They get assets and how that works, and owning assets, and that's the importance. And that's true in an inflationary world, but in a deflationary world, with a deflationary money, that's no longer true necessarily. You can just save. If you work at McDonald's and you save more than you spend each month, you can get just as wealthy as the doctor who's spending 300 grand a month but makes 310 a month, and they're saving 10 grand a month. Well, someone working a median income job that saves 10 grand a month, we'll just say in fiat dollars for easy math, well, they can earn and gain the same amount of value. And over time, they will accrue the same amount of purchasing power. That's the brilliance in this. And the real brilliance is that if they saved 10 grand a month, but the doctor only saved 1 grand a month, they will get exponentially wealthier as time goes on, saving that $9,000 difference. That we'll just say in Satoshis, it'll be priced in Satoshi someday, saving 1 Satoshi over the doctor who's saving, zero point 0.1 Satoshi or 0.1 Bitcoin versus 1 Bitcoin a month. Now, all of a sudden, after 10 years, say, or a year, that person working at McDonald's has 10 Bitcoin and the doctor only has 1 Bitcoin, 0.1 1.2 Bitcoin versus 12 Bitcoin. So again, follow me on the math here, but it's the whole repricing of the economy. And now the person that had seemingly the job that wasn't providing as much is now exponentially wealthier than the doctor. And that this is the repricing. I just did a video that I'll try to link to about the repricing, and Bitcoin breaks all your models. It breaks the fiat legacy monetary system and reprices everything. And this is what's going on in the world. This is why it's so hard to understand what's happening. We have the repricing of everything. This truly is the mark of a new generation, of the information age, truly. And it's being repriced in real time. You have, if you're trying to buy a Palo Alto home, it keeps going up. The amount of dollars you have to find just keeps going up and up and up and up to the right. However, priced in Bitcoin, if you're holding a Bitcoin, it keeps crashing through the floor, meaning if you have Bitcoin, you've been holding it, life just gets cheaper and cheaper. Same with a carton of milk or a carton of eggs. It just keeps going down and down and down and down. So if you save in Satoshis, if you save in Bitcoin, your life continually gets cheaper instead of saving in fiat dollars, which they just keep devaluing and printing more and more and more of and typing more into a computer. It'd just be like the baseball card of Babe Ruth. You have the only rookie card, but then Upper Deck or Topps comes to you and says, hey, we're going to print 1 trillion more of those. What do you think happens to the value of that card? Now substitute that with the dollar or the peso or the yen. Now hopefully you see what's going on, and the value of the asset you hold just continues to plummet. A quick side note before we jump into here as well, we had Colin Cowherd, which I thought was hilarious, with Aaron Rodgers talking about energy money. And Colin Cowherd was just completely oblivious to that money is energy and energy is money. As we have showed many times in here, money is a container for your economic time and energy. That's all it is. And it's a trade. And that's why I say at the beginning here, at the end of every video, I want to make a true trade for myself, the only fair trade there is, which is a finite money for a finite time. I can't get any more time. So I want something that's equally finite, equally hard, and that is Bitcoin. There's nothing else. I can't trade in dollars because it just keeps running away. They keep printing more of it, keep diluting the power of it and the value of it. So let's jump into this. And again, with that preface, with that context, it's going to be a wild year and a quick little bounce we had in the markets, presumably because people are buying back in. You see a lot of buying back in to the markets because of the tax loss harvesting that probably was going on when you had a down year. A lot of people tax loss harvesting, selling off assets, locking in capital losses to offset any gains they've had or things that could roll into the future, any gains, which is a great strategy to do. We actually did that as well with some of our assets. Some of our Bitcoin as well. Some of the Bitcoin we had bought above, I have a fairly low cost basis, but we actually did that as well and locked in some capital losses on Bitcoin and some assets we had there to lock in a lower cost basis and provide ourselves with some capital losses. And again, it wasn't super massive because we'd been buying for a while, but it was still a little bit below or a little bit above where the current price is. So that was nice, and I was glad we were able to do that. And again, just transparency in what we're doing here. Again, maybe this bounce lasts, but I wouldn't hold my breath long term. This is probably a short term pop again. Dr. Jeff Ross, Lynn Alden, Mark Moss, and many, 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 many others. I mean, many. The most I've ever seen in my life. Macro investors, influencers, economists, all saying they expect recession or worse here. If not end of the first half here, probably the second half of 2023. And this is why we continually prepare for what is ahead here. Trust, don't verify, don't trust what I'm saying. Do your own homework. And we can continue putting out the content that and talk about what we're doing and also what we see going on in the markets. But the charade cannot go forever, and I'm just going to keep reporting on what's going on and asking why, questioning everything. And we truly are. This is my favorite meme. I'm going to share it for 100 more years. We are the fiat legacy system. The Titanic is slowly sinking below the waves. It took, 2-3 hours for the Titanic to sink? Well, that's exactly what's happened. It's taken 2-3 decades, 4 or 5 decades for the U.S. financial legacy system to sink. Because it is the Triffin dilemma, it's a world reserve currency, it's going to take a lot longer to sink. It's not as easy to go under the waves as it would be a small fishing boat or tugboat like Sri Lanka's economy or the Venezuelan economy or something like that, or the Cuban economy. This is an aircraft carrier. It's the Titanic. It's going to take a long time for it to sink. It's not always the case. It doesn't have to be, but generally, especially in this case, it's going to take a long time. And you have people here, again, on the stern of the ship saying, are you crazy? The dollar strength is going up overall. Like, you guys are nuts. Bitcoin's way too volatile. But again, like we talked about, Bitcoin is still a small market cap. Most of the world does not understand Bitcoin yet, and the repricing, the invisible crash, and Mike Maloney's talked about this forever. This is one of my first foray into monetary history 12 years ago, and him saying there's an invisible crash that will happen. He thought it was going to be gold and silver, and it's going to be in Bitcoin because it's already starting in Bitcoin, where you have, if you're holding a Bitcoin, everything in your life just starts getting cheaper and cheaper and cheaper. And if you hold in fiat currencies, life just keeps going up and up and up and running away from you, and everything gets more expensive. That's why housing, everything just keeps running away. So once you hold in the perfectly finite hard asset, it starts everything going down in price. And this is where you can actually see values, true values of what's going on. That's what the beauty of Bitcoin is. So the legacy financial system, again, is sinking. Bitcoin is the life raft. It's the stable constant out there. It's the 21 million. It's a science experiment. It's the control experiment, and it's sitting there, the lifeboat, waiting to take you on, to take anyone on, and say, hey, like, we're building the parallel system over here. We're building the future that we want to see. We're the change we want to see in the world, and we're going to build it. And there's hundreds and thousands of people building these systems that I talk to every single day in Twitter Spaces, in conferences, and see what's actually going on. And it's going to take 5 years, 10 years for this to completely get built out, for people to see what's going on. Colin Cowherds of the world who don't understand, making jokes. The Peter Zeihan's going on Joe Rogan thinking, oh, this thing has nothing to do with anything. It's just complete garbage. Tell me you don't know anything without telling me you don't know anything. Again, we are so early. We are so incredibly early. 1 in 10,000 people probably could really articulate you what Bitcoin is. And you think about, we're 93, 94 internet. That's why Bitcoin is an incredible trade, not only as an asset, but also as a money, the future money in the system. Do you want to build the future? Do you want to build a future for your kids? Because we know the system is sinking. Again, you don't just because you don't believe it's happening doesn't mean it's not happening. And again, look at all street corners. Look at the street corners everywhere. The piles of homeless everywhere. In Michigan here, it's not even as bad as it is in Arizona, California, many places. The protests around the world, Brazil, what's going on in Europe, protests all over the place. Sri Lanka storming the palaces. It looks a lot like the French Revolution. IRS coming after $600 in your account. What are you doing with that $600? But, budget for the Pentagon, losing trillions of dollars? That's okay. Years. Can't even find it. I mean, the Congress doesn't even do budgets. The Pentagon fails its 5th audit in a row. I mean, you can't make this stuff up. So these are all red flags for anyone paying attention. And I will keep putting this out there till I'm blue in the face. This is in our face. It's literally here. And it's for anyone who wants to see it. Anyone who wants to see what's actually happening. And I just tweeted this out earlier, but a measured mind and an intelligent and a humble mind will go down the path of what someone's saying and say, you know what, maybe I'm wrong. Let's go down this path a little bit. And the beauty is, even if you deem it to be super crazy and wrong, you can always back up, reverse, and go back the direction you were going. But at least check this other way, because there might be something to this. As Satoshi said, you might want to get some in case it catches on. There's a reason that 80 to 90% of all Bitcoin holders don't let their Bitcoin go. It's just the fringes that let it go and drive the price down, and then other things too we won't get into. But that won't be forever. And the more and more people that are holding on to it, the less there is available for people that are jumping in. And it is the new monetary asset. It is the new world. Again, things are fine until they aren't. We are so reliant on centralized structures and logistics that we will learn the hard lessons if we aren't prepared. But that's what this channel is about. It's about preparing and doing the things necessary and heeding the warnings that chaos can be mitigated to a degree if we so choose. And again, here is the allocation. Hasn't changed much over the last month, just a little bit here and there, but no major moves necessarily, which we'll go into quick. And again, I'm always a student. I'm not an expert. This is never financial advice, but it's only what I'm doing, what I see. Bitcoin. Again, we've talked about this a fair amount, but Bitcoin is not crypto, and crypto is not Bitcoin. Crypto is garbage. There is only Bitcoin. The real power lies in the fact when you own and custody your own Bitcoin keys in your cold storage wallet. You have become your own sovereign bank. And this only takes a few seconds. And I have other videos out there. There's many others you can YouTube. And Matthew Crater has some Bitcoin sessions. I'm going to actually make some videos as well about where to exactly go on this site, where to purchase it, how to get it sent to you, and become your own bank. I'm about to tweet out and put some other videos about Lebanese. Multiple people in the last handful of months having to go shooting at their bank, robbing their bank, threatening people, taking hostages at the bank because they're shutting down the bank. We just did stuff the other day about Cyprus and the bail-ins, and we just posted a bunch of videos, which you're going to see here in a second, about the FDIC here in the last 2 months telling you there's going to be bail-ins. But don't alert the people. Don't let them know that their own money is at risk, because the fiat system is corrupted. It is always been corrupted, and it is corrupt. That's what it's built to do. It's built to transfer wealth from the poor middle class who don't know, the unsuspecting masses, to the elites, to the people laughing here at you at the end of the day. And if you choose to ignorantly just go about your day, then you will get hammered. That is 100%, I can guarantee that without a shadow of a doubt. So Become your own bank, please. No one can freeze you out of the system or dilute or steal your wealth. The reason that I'm so passionate about this is because I don't want these people having power over any of us. The more power that we have, the people, the 99%, the less power the tyrants, the despot, the lizard people, the less power they have, and the less they can control our lives, the less they can control my children's life, the less they can control my grandchildren's life. That's the selfish part. That's what's in it for me. At the end of the day, I know I'm successful. I know I'm going to be successful, even if it was in an inflationary monetary system and what we're in now, or deflationary system. I think I stand to benefit by holding Bitcoin and being a holder of Bitcoin. I'd still be successful in this old system too, because I understand how the process works. However, what I see though is that this wealth gap keeps running away, and it keeps getting wider and wider in this inflationary system we're in. And this will cause more and more unrest, and these people will do more and more ridiculous things, and the average person is going to get absolutely screwed. And that's what I'm trying to cut off at the pass, so that my kids, your kids, my grandkids, your grandkids have freedom and they have liberty instead of being controlled by central bank digital currencies. That's what I'm in this for. That's why I'm in this fight. I don't make affiliate income off of promoting Bitcoin. That's not possible. It's not a company. That's the beauty of it. It's all on hard work, diligence, and providing value. And it's a 5, 10, 20-year game that, you know what, maybe I'll stand to become very wealthy someday. But that's because I put in the work and I educated the most amount of people to freedom, liberty, prosperity, the Bill of Rights, the Constitution, free markets, and capitalism. That's it. Really a new form of capitalism, quite honestly. Bitcoin fixes many of those monetary problems the central bank has brought on us, like inflation. Central banks are the root of evil, not money. Central banks are the root of evil. Again, no one can freeze you out of the system or dilute your wealth if you hold Bitcoin in your own cold storage wallet. If you leave your Bitcoin exchanges, you will eventually get wrecked, rug pulled, or have your wealth stolen. Not your keys, not your coins. And not to mention, again, like we said earlier, even the FDIC, the Federal Deposit Insurance Corporation, came out and said you will get bailed in if you stick in the legacy system long enough. And here is the clip that I posted, the minute clip, thanks to Mark Moss for posting this. I also have a link, I believe somewhere, but I also posted it to the YouTube and I believe it's on the description of this video actually, and it gives the entire 3-hour presentation, which I've listened to probably about half of it already. I'm going to listen to the whole thing, and it's incredible. There are some people that said some good things, and you can tell people, a lot of them have good intentions, but they're so caught up in the old world system that they don't even see what's going on and what they're saying. So you have to take what they're saying and take it seriously, because this is real, and they're warning you. These are the warnings. And again, I did a video a day or two ago about the repricing of the models and the invisible crash going on, the repricing of everything, and the transfer of wealth from those who are in Bitcoin and those who understand what's going on and can read the tea leaves, and those who aren't, and those are in the fiat system. They're in that Titanic still here, and they just are slipping underneath the waves, and they're the ones playing the music and still claiming that the ship's not going down. I don't want that to happen. Again, leaving all assets in a bank is just as dangerous as leaving them in a crypto exchange. We are now in an era of personal responsibility and accountability that will sweep over the country and the world in the next decade or two. Alex Svetski is a prominent figure in the Bitcoin community and a writer, and he wrote a book recently with Mark Moss called The Uncommunist Manifesto, and he says Bitcoin is responsibility go up technology. That's what Bitcoin is. It changes you. Bitcoin changes you. You don't change Bitcoin, it changes you. Right now we have about 21% in Bitcoin, but again, I do expect this to become majority of our net worth in the next 5 to 10 years. Here are some different wallets that I like, checking and bill pay, kind of that day-to-day, keeping, $20, $100, couple $100 in your wallet, like a wallet you would have in your pocket. This is an app on your phone, and Moon Wallet is one of the ones, I like, Blue Wallet, Satoshi, and I would just keep $100 in here, a couple $100 or whatever it is you're comfortable with, in case you lost it for some reason or someone took it. The important one is the cold storage wallets, the savings, retirement. That is where you want multi-sig or a single sig, but getting Blockstream Jade, a Trezor, Cold Card. These are open source wallets where they can be audited. The code can be audited of these wallets, which is beautiful. And you set up your key. This literally takes 5 minutes, maybe 10 minutes max if you're not super tech literate. And again, tons of great videos out there how to set this up and become your own bank and store it. And you never have to worry about someone rug pulling you. That's it. Take your assets into your own custody. So real estate, positive cash flowing real estate. So our last refinance is taking forever because of all the hoops we've had to jump through on the commercial loan. The rates are still rising, obviously, and the Fed may slow it down. But the next 6 to 12 months, again, it might be a great time to pick up some real estate, maybe some apartments, in the next 12 to 18 months as things flush out. I would rather hold cash short term over the next 12 months and have long-term debts as long as at lowish rates paid off by our residents. Real estate getting crushed overall, and I'm not touching it yet. I'm not touching it yet. I want the market to flush itself out, like I said, over the next 12 to 18 months. And right now we have about 36% in our rental real estate portfolio. And again, the dollar is debt. The dollar is debt in this inflationary system. I wish it wasn't so, and it won't be. When we have a Bitcoin standard, Bitcoin will be the thing. It'll be the asset, the bearer asset, and it will be actual equity instead of being debt like the dollar is today. The dollar is actually a liability on your balance sheet. Commodities, gold and silver, oil wells, uranium, copper, wheat. I wish I had some oil wells right now or some uranium. That'd be nice. I haven't bought much in this area because we've been buying Bitcoin and we've had other things going on, trying to refinance other assets. And I have a good position in, gold and silver and some of these assets that I feel comfortable with. And but I know commodities will be sought after over the next decade or two. Things of actual value, primary assets, are going to be very sought after. Primary assets are always a safe bet because people need them and we need to use them. We consume them, not the paper derivatives, but buying the actual thing like an oil well or physical gold and silver. Commodities, I believe, will be in a bull market in the next decade or two as derivatives crash and primary assets come front and center. Again, we have about 17% in gold and silver right now. So, a little bit overweight just because other things are down a little bit. So that's up in weight a little bit, but it's probably usually around 10%, 12%. Paper, stocks, bonds, IRA, stuff like that. That's all one asset class. That is not different. You can probably put, life insurance and stuff in there. Those are all paper asset classes. They're all tied to the stock market. Pension, 401ks, IRAs, life insurance. All those things are tied to the stock market. They're tied to the bottom of the trough, basically, which is the stock market. And the stock market is derived from the credit and debt market. So the credit and debt markets, that something happens there, and then stocks are in insurance and things like that too are buoyed by fixed income as well, and debt, bond markets, which again, who knows what's going to happen there? Bitcoin might reprice that entire market. Then what? So you might have Bitcoin take out bonds over the next 5, 10, 20 years. You might have Bitcoin take out these assets and really take premium away. So what happens when premium goes away from the bonds? Well, the bonds crash in value and then the rates rise. Meaning your bonds that you're holding in your portfolio will be worth less and less and less because people can get new bonds worth a lot more yield. So they're inverted. So again, these are very important things to understand when you're getting into certain assets and these traditional legacy assets. They're built for a time that has gone by. And again, this is not financial advice. This is freedom advice. This is understanding the difference and knowing what you are getting into. And again, we're battening down the hatches, and we only have 2% in stocks. I stopped my company stock buying. I'm out of all that stuff, and I don't, fortunately, don't need stock. I've got all kinds of other assets and alternative things going on that give me great position to be in, and I don't need stocks. I don't want to. I don't have control. I don't have control. It's the least controllable asset class are stocks. And then cash and businesses looking to invest in some private companies still, like multifamily, apartment complexes, self-storage, mining operations, stuff like that. But again, right now it's tough. I want to see what's going on over the next 6 to 12 months. I want cash on hand to live life and be able to see what's going on. My liquid cash, that 20% or so, 30% will probably climb towards 30% with cash. Right now we have 24%. It'll probably be about 30% or so, or maybe 30, 35 in the next 6 months. So I want that allocation to be there so we can scoop up great deals and we can kind of see what happened in the next year or two. And again, cash on hand is another great thing in case our long-term view of inflation is wrong. If we experience massive deflation and the dollar increasing in strength and goes to 120 on the DXY, the dollar strength, relative strength chart, or 150 or 200, then again, we'll be able to pick up massive deals with our dry powder, massive deals all over the markets with our strong dollar. So it's good to have a little bit of that cash cushion right now into what we're going into. And this is one of my favorite charts. This is inflation. It's coming down a little bit, but you can still see we're above 15. If you're actually measuring in true inflation from the 1980 metrics, and they changed this to obfuscate what's going on. They're telling us, what are they telling us? Oh, it's only 6%, 7%. Okay, it's really 15, 16%, if you're truly measuring how we used to measure. So again, just to show you how far off we are. And this is, again, another one of those reasons why people have a very hard time seeing what's going on, understanding, and why people keep losing, why the 90% keep losing, because they're not told the truth, and very few people are seeking the truth, unfortunately. So in conclusion, the Fed did start slowing their rates like we predicted last month, And they may keep slowing them or pause the rates in the next couple months, depending on how the CPI numbers come in, these lagging indicators, unfortunately. And a good portion of my letter hasn't changed much in months because patience is the biggest ingredient to successful investing. Patience, patience, patience. Warren Buffett talks about this all the time. Investing is like driving, like I said last month. The people who change lanes the most get wrecked. They get in accidents. They're taxed. They got capital gains. They're trying to trade in and out, chasing things. It rarely works out well. You're fighting against algorithms and professionals. The DXY, the relative dollar strength, and the 10-year yields, so the bond market there, the 10-year bond and the 10-year note, I guess, bills, we get bills, notes, and bonds. But the 10-year bond and the dollar relative strength is the DXY, that chart, the strength of the dollar versus all other currencies, have come down a bit, which has taken a little pressure off. And that's why you've seen risk on assets, stocks, and that kind of tick up here the last 2 weeks after those things were inverted toward the end of December. After we wrote the letter last week or last month, things started trending up on the DXY and the 10-year, and risk on assets like Bitcoin, stocks, things like that started to come down a little bit. And Bitcoin will eventually be, I think, in the next 4 years, this next halving with Bitcoin, it'll decouple itself from the risk asset side, and it'll start decoupling from stocks and the NASDAQ and stuff once people start, because people still just do not understand Bitcoin. They think it's just some like tech stock, and it could not be more wrong. This is not the time to get fancy and trying to shoot the moon and make a killing. Be defensive and learn as much as you can. Great wealth is being transferred right now, like we've spoken about, in the coming years for those who did not understand the global landscape to the ones who studied and were diligent. There's a video I made here this weekend on how Bitcoin is repricing everything, like I talked about earlier, and how to value assets regardless of price. Price doesn't mean anything. We have to understand the value, and this is where Bitcoin is destroying all models. Wealth is never destroyed, it's merely transferred, as Mike Loney always has said. And here's another great site. Everything priced in Bitcoin, in the link above. You have the charts in here, everything. A time chain stats are another one. I don't think he has the charts in there, but it shows you what everything is priced in Bitcoin. And just, you can see, again, in this site here, everything priced in Bitcoin keeps going down over the last 12 years. If you own and hold, you just hold it, everything in your life gets cheaper. So it's a great way to see the repricing of all assets, as it is the hardest money to ever exist. And it's opposite of what's happening in fiat, and hard to see if you're holding just fiat and looking from that angle. We are riding a very fine line of staying liquid, but also don't want a ton of cash in the balance sheet of more than 12 to 18 months because, again, you're paying an option premium of having that cash in the sideline. The option premium is real inflation, which is around 15 to 20% each year. So keep that in mind when making an investment. It has to be getting greater than 20 to 24% each year, as Buffett does say. And we love and hate Buffett at the same time here. So precisely why I love saving in Bitcoin instead of US dollars, because it historically has grown. And like I said, you go look at price in Bitcoin, everything in life is getting cheaper and cheaper because it historically goes up 100 to 150% a year. You just have to zoom out. You can't look in a 6-month time frame. Then you're showing that you're not understanding the concept of what's going on here. This is not a trader mentality. This is an investor mentality, a long-term mentality. I only want to trade, this is the most important thing, I only want to trade my finite time for finite assets, not trade my finite time for infinite pieces of paper or digits on a computer. Make an equal trade for yourself. Stay strong. Again, this is freedom advice, not financial advice. I appreciate you listening to this, taking time out of your day to. It's the most important asset we have. Like we said, Bitcoin is time and time is Bitcoin. The two finite assets we have in the world, the only ones we know of, can't get any more. They're not making any more of either of them. So I appreciate you, and please like and subscribe to the channel. Please share this with someone you think might get something out of this or might need a walkthrough. You can't be a messiah in your own town, so it's hard to talk to friends and family. I get it. I do it all the time. So please share it, like and subscribe. And if you don't like it, please let us know what you don't like, and we can battle out in the comments. I look forward to seeing you on the next one.